Stocks retreated on Friday to finish a difficult month as Wall Street dug into the recent release of the Fed's favorite inflation gauge, which is the Personal Consumption Expenditures Index, or the PCE. The downward move on Friday was part of the sharp losses for the month and quarter as a brutal September came to a close. For the month, the major indices saw drawdowns from 3 to 5%. And not helping the cause was rising oil prices and fears of the Fed's higher for longer interest rate strategy. And in that light, the focus on Friday was the release of the PCE reading for August. What we saw was that the core PCE, which strips out food and energy, rose 3.9% on the year. This is the lowest reading in almost 3 years and down from 4.2% in July. So that should help Humpty Dumpty. But still weighing on investors is the looming government shutdown, which is looking inevitable given the gulf between the parties. Now, for extra credit, can you point out the two parties and the gulf between them? And let's go back to the 2-year weekly chart on the spiders, the SPY. The close here on Friday, 427.48. Now, I've set up these channel lines, bottom channel line here and upper channel line right there. So, as we spoke last week, I expected to come down to that bottom channel line. That's exactly where we are. We're still slightly above that 50 EMA, but it's possible that this move into next week can go below both of those. It kind of depends upon what's happening in DC. I hate to say that. Politics always plays a role. Now, it did go below there, and of course it went below here. So it's a possibility. I wouldn't be too worried about that, but we'll see next week how steep of a drop that is and how much further. Now, what I'd like to see next week is the beginnings of a bottoming and basing in this area here. So we'll look for that. I'm not sure what the probabilities are, other than I do expect weakness into next week for sure. Now, going down here into volume, that's not going to show you too much, but the MAC does, with the fast line accelerating on the downside. And you see that the slow line is also heading on down to, we're still above the zero line, so we still have some strength. But that acceleration on the downside is a little bit concerning, only at the cautionary yellow flag level, at least right now. But you can see in the histogram that from this point here, things moved on down, and then in the last, say, 3 weeks, started to accelerate. Hopefully we can turn before that -5, as we did in these 3 occasions here, here, and as well as here. I don't think it's going to be this shallow. I'm looking for something more like this here. We'll have to wait and see. Moving here into the price rate of change, we're going south of that zero line with the fast line. We have the same acceleration with the slow line also moving down, so things are weakening. Oh, duh. Into the relative strength index, we're at a moderately weak 38.64. The move down here, somewhat consistent with that. Hopefully we can perhaps stay above this, and I would really like to stay above that. So I'd like to come on down here, no lower than this line, and bottom and base in this area here. We'll be watching that for the next week or two. And then into stochastics, this definitely has broken below the 50 or midline, with the fast line moving on down pretty quickly. That's a pretty fast separation. So hopefully this is going to end quickly and then head back up, hopefully like this here. We'll have to wait and see, but things definitely are weakening. I'm sure you all felt it. Into the Williams, we had a bounce off of that -100. We're at -95.32, which is not all that encouraging. So we may do a bit of sawtoothing before we can head back on up. So what I think the probabilities are is more weakness into next week for sure, but hopefully we can see some signs of improvement. At least that's what I'm going to be looking for, and use the 2-year weekly chart to find out what's happening. at least for now, because that's the chart that seems to be in control. And for today, that's ChewDog Charts. Thank you.